What's up, everyone? My name is Rose Brown, also known as the Accountant Therapist, and welcome to another Tax Tip Tuesday where we are talking about a topic that addresses a lot of people or affects a lot of people, if you will, and that is credits that are related to children. So if you have a child, if you're expecting a child, you know someone with a child, you already have children, this particular topic here is for you. Right. So there are quite a few child related tax credits in which I want us to kind of talk about, right? And just make sure that you understand your eligibility, what makes it or breaks it, essentially. With that being said, I am the CEO of Brown's Advisory and Accounting Firm, where we provide an array of accounting services, including taxation for individuals and businesses. So if you are needing to, let's say, speak with me for an initial free consultation, you can do so through our website at www.brownsfca.com, or you can send us an email at info@brownsaaf.com. Now, we do have two locations, one in Philadelphia, Pennsylvania, and one in Atlanta, Georgia. I think that covers it all. Now, with the Tax Tip Tuesdays, right, I like to do a quick recap of the video prior. This way you understand how we're flowing, right? So last week I talked about the earned income tax credit in great details, right? I'll touch on it a little bit in this video here, but it was covered quite a bit last week, right? So if you are someone with low to moderate income, maybe you have a few children, maybe it's just you, but you fall within that low to moderate income category, that particular credit there would have been applicable to you. But of course you have to have earned income. So if you did not get to see that video, definitely go ahead and check it out and let me know if you have any questions, okay? So I know today we have a lot to talk about, so I'm just gonna kind of jump right into it, right? So there are 4 child-related tax credit that are major contributors to refunds that folks oftentimes get. Right now, they help to produce what you would call the big bucks, right? So a lot of people who get refund and they have children, these are the reasons why. Most times they are, right? Now, we have the earned income tax credit, which I mentioned that I talked about last week. We have the child tax credit, the other dependent credit, and the child independent care credit. Now, all of these are a little bit different in terms of application. And the first thing that differentiate all of them is their refundability status, right? So a tax credit can be fully refundable, it can be partially refundable, or non-refundable. So before I touch on all of these child-related tax credit, I want us to kind of break down what this means: fully refundable, partially refundable, and non-refundable. Because whenever you hear these credits, there is some level of refundability attached to it. Right? So we talk about fully refundable. That is a credit that can afford you to have a refund by the amount of that credit, right? So what that means is if you are if you are eligible for a fully refundable tax credit, you can receive that entire amount into your bank account as a direct deposit, right? If you have no tax liability, right? So you can receive that entire amount in the form of a refund, fully refundable. Partially refundable says, hey, only a portion of this is refundable. The other portion is non-refundable. And what that means is the portion that is non-refundable, it can only offset your tax liability or help to increase your refund, but you will never receive that amount there. That tax credit that is partially refundable, that portion that is non-refundable, you won't receive it in the form of a refund. Now, on the end of that, we have the extreme scale, right? Non-refundable, which simply says, hey, if you are due this credit, if you're eligible for this credit, you can't receive it in the form of a refund, none whatsoever, right? And with that same credit, it can increase and or it can increase your refund and or decrease your tax liability. Right, so we'll be talking about the different types as we go along, but I just want us to understand fully refundable, partially refundable, and non-refundable. Okay, so as I mentioned last week, I talked about the earned income tax credit. That credit there is fully refundable, which is to say, if you are eligible for that credit, you can receive that entire amount in the form of a direct deposit, or a portion of it can be used to write off, decrease your tax liability if you have one. Right now, What I do want to switch gears and begin to talk about is the child tax credit, which a lot of you guys are pretty familiar with, right? Now, the child tax credit has so many different moving parts to it that you have to make sure that you're absolutely eligible for it in order for you to claim it, right? So what that looks like is there are 6 factor tests. So each of these, you must be able to kind of check off the box to make sure that you are absolutely eligible for this, right? The first piece is you always want to make sure or ensure is that the age range is applicable, right? So in order for a child to be eligible for this particular credit, as of the end of the prior year, so 12/31 of the prior year, they need to have been under age 17. Now, that's what the law says. Pretty much that says the child needs to be 16 years old or younger at the end of the prior year. Okay, so if we're talking about 2024, that at the end of 2024, that child needed to be 16 years old or younger in order for you to be eligible for this credit. Now, that's one factor, right? Now we have the relationship test. When we begin to talk about the relationship test is how do you guys quote unquote know each other, right? Is this your child, your adopted child, your biological child, your stepchild? Is this your foster child? Is this your sibling, your half, full, or step, your niece or your nephew? So any one of these types of relationship could cause you to be eligible for this credit. Now, we just talked about 2 of that 6 factor, right? Now we're looking at support. So support says, hey, I have provided more than 50% of the living need concerning this child, right? I've been taking care of them. I have a roof that they're living under and I'm paying the bills, right? And then we have the residency test. So that says, did the child live with you for more than half of the year? You also have to be able to prove that, right? So oftentimes it may be records from the school. It might be records from childcare, from the childcare agency, right? So all those different things you want to kind of keep in mind. And then we have that child cannot be claimed as a dependent on somebody else's tax return. Right? And then the last piece here is this child needs to be a citizen or a resident of the United States, and they must have a valid social security number. So those are the 6 factors you want to keep in mind as you think about the child tax credit. And it may be a situation where you're not the one that's doing your tax return, and you hear them talk about these things when they review it with you, or maybe you do your tax return by yourself and you just see it pop up on your tax return and you're like, wait, what does this mean? Well, this is what that means, right? So you put in that detail, you're like, oh, the child is under 17. Okay, we're on our way. Now, in terms of phase out, if you are claiming a child, right, and let's say you fulfill all 6 of those criteria. The child lives with you, you care for the child is under 17 years old, the child is a U.S. resident, this is your child, right? However, your income, your total income is over $200,000. Now, if you're single or head of household and your income is over $200,000, you begin to experience what is referred to as a phase out of this credit, right? The phase out says after a certain point, so that 200,000, once you hit that on your total income on your tax return, the amount of that tax credit begin to decrease, right? The amount begins to decrease until you no longer are eligible for it. Whereas if you're married, filing joint, it's 400,000 before you begin to hit that phase out, that decrease in the credit. Okay. Now, with regards to this credit here, the child tax credit, it is partially refundable. Okay. And the amounts or how it's split is 1,700 is refundable and 300 is non-refundable, which is what makes it partially refundable. Now, over time, they've kind of played with these portions, right? In the past, it was 1,200, 1,600, all these different numbers. And now they're kind of inching up to where it may potentially be fully refundable in the future, right? I know in Congress, they're having different conversations concerning the increase of this tax credit, right? From 2,000 to a higher amount. So it's one of those things where nothing right now is set in stone, but it is a credit that is here to stay. And if you have a child, again, you know someone with a child, you're about to give birth, hey, you're about to get an extra present, okay? All right, now that we covered the child tax credit, let's go into the credit for other dependent. Now, this credit here is for folks who are unable to claim the child tax credit. So what that means is if you were not eligible based on any of those 6 tests, test factors, then this is where you fall, right? So the other dependent credit says, hey, maybe the child is now 17 or older, right? Maybe the child is in college, but you're claiming them on your tax return. This credit here, you're eligible for it. Or maybe your child doesn't have a social security number, they have an ITIN, right? Now this credit here becomes applicable. Or maybe you're not related to the child at all, but you're caring for this child. Again, you're eligible for this credit. Now, this other dependent credit is not just necessarily child related. It really comes to a place where you're caring for someone, right? So maybe that's an elderly parent that you're taking care of, right? They're living under your roof. You're paying for their living needs, right? This is your dependent. You are taking care of this person. Then yes, you would then be eligible for this credit here for the other dependents. Now, all other requirements, as I mentioned, for the child tax credit is applicable under this umbrella, right? The only thing is, you just want to make sure that, hey, what's the relative relationship between the relatives, right? So a dependent could be your relative, they could not be your relative in claiming this credit, whereas under the child tax credit, they have to be your relative of some sort, all right? Now, with regards to providing, again, are you paying rent? Are you paying for utilities? Are you paying the mortgage? Are you paying for more than 50% of this person's living needs, right? Maybe it's a person who at this time they're unable to work, they can't, care for themselves, and you're the one that's caring for them, right? I've had a question in the past where, hey, my boyfriend lives with me and I take care of him. I mean, it was an interesting question. Nevertheless, if it's a situation where you can absolutely prove that I have been taking care of this person, I have the receipts, I can substantiate this, then you find yourself in a position of being able to do so, right? Now, this credit here is non-refundable, and it's worth it's worth $500 per dependent that is claimed on the tax return, okay? So if you have two dependents, let's say one is 19 and one is 25, each of them allow you the ability to claim a tax credit of $500. So that's $1,000 total because of those dependents that you claimed on your tax return. Now, as we talked about the phase out with the child tax credit, it's the same thing here. If you are single or head of household, once you hit that 200,000 mark, you begin to phase out. Whereas when you're married, filing joint, it's 400,000. The phase out starts kicking in, right? So you just want to kind of make sure that you're paying attention, all right? Now, since we've covered the credit for other dependent, we're going to kind of shift gears and we're going to talk about the child independent care credit. Now, this is an interesting one, right? A lot of people associate this with, hey, my child went to daycare, right? So if your child went to daycare, you have a high possibility of being eligible for this credit. Now, this credit is a little bit interesting, right? So it's applicable for daycare. So amounts paid to daycare, summer camps, home care while working or seeking employment, right? So maybe it's your elderly parent that you need to send to a home care, right? Elderly daycare or something of that sort. And this is all taking place while you are either working or you're seeking employment. So you can't just hire a nanny and say, hey, you know what, I'm not going to work. I'm just going to have the nanny do the work and still claim that credit. No, the government wants to see that, hey, while you were seeking work or working, you were paying someone to care for your child or your dependent. Okay, now the child must be under age 19. However, if they are older, they would have to have some sort of disability and not have income greater than a certain amount. Right now, when we talk about healthcare providers, that's for a person who's elderly or maybe they're disabled, right? So you're paying for their care while you're working or seeking work. Okay, now that person would have needed to live with you for more than half of the year. Okay, and this credit is really based on a percentage of the expenses. So what that says is, and this is real numbers here, the maximum expense per child is not per child, for one child is $3,000, right? So it's up to $3,000 is considered towards this expense. That's not to say $3,000 is going to be deducted on your tax return, but it's a percentage of that $3,000, right? And the percentage will be determined by how much income is reflected on your tax return. Now, if you had, let's say, 2 dependents or more that you are paying for childcare services for, that number becomes $6,000. Now, it doesn't matter if you have 5 of them, it's still going to be $6,000. So if you have 1, the max expenses that are considered is $3,000. If you have 2 or more, it's $6,000. So you want to kind of keep that in mind, right? And if you have this credit here and it's reflected on your return, you want to make sure that there's earned income on your taxes as well, right? And you have to also make sure that both spouses are working. If not both spouses are working, the spouse that is not working needs to have been attending higher education, college, or they're physically unable to care for the child, so they needed to get the help, right? Now, generally, if you are filing separately, right? And a couple of weeks ago, I talked about the different filing statuses. So if you're doing married filing separate, generally, you're not able to claim this credit unless certain exceptions apply, right? So you want to kind of keep that in mind. One other thing to think about when it comes down to this credit here is if your employer gave you funds towards childcare for your children or your child, right? If they gave it to you, you want to make sure that that information there is reconciled on your tax return. Okay, so every expense that you spent out for your child who is under 13, right, and you receive that receipt from the child care center, you want to make sure that that's a part of your tax document so that it's reflected on your tax return. Because ultimately, most employers, they reflect that those funds that they give to you on the W-2. And what you have to do is reconcile it on the tax return so that you don't pay taxes on expenses that you've spent out. Okay. Now, that's to say with employers, oftentimes this amount is $5,000. Now, that is the limit. They can give you less, but they generally won't give you more. Okay. And with regards to this credit, it is non-refundable. So just to make sure that we're on the same page, non-refundable means if you are eligible for this credit here, you wouldn't be able to get it in the form of a refund. You could only use it to offset your tax liability, or it could be used to increase the refund that you already have, right? All right. So as we wind things down, I'm going to end it with the earned income tax credit. As I mentioned before, this is the only child-related tax credit that is fully refundable. And this is only for folks with earned income that are in a low to moderate income bracket, right? So once you are in that position there, you then become eligible for this credit. Now, it's really based on your filing status. It's based on how much income you have, and it also is based on how many children you have on your tax return, right? Now, I do want to put a disclaimer out there. The good thing is February 15th has already passed, but with the additional child tax credit, which is a part of the child tax, which is the refundable portion of the child tax credit, and this earned income tax credit here, by law, the IRS cannot release refunds concerning this until after February 15th. And again, fortunately, it is February 18th. So you're okay for the most part if you've already claimed it, right? So what that means is the IRS is now processing your tax return, and hopefully you should be expecting it by the end of this month into early March. All right, so the IRS is still processing refunds on that 21-day, give or take, timeline that they've given to us in the past. All right, now that concludes it for today's live. Just to kind of do a quick recap, we talked about tax credits that are child related, right? And we talked about the child tax credit, the other dependent credit, the earned income tax credit, and the child and dependent care credit. All of these have different moving parts, and you want to make sure that you're absolutely eligible for them before you claim it, because these are credits which are dollar for dollar, which means it can wipe out your tax liability dollar for dollar versus a deduction, which is only percentage. When we talk about tax credit, the IRS takes extra precaution, right? They want to make sure that you are absolutely eligible for the money that they're essentially about to give you, right? So that's why when you go to file a tax return, whether you're doing it on your own or someone else is doing it, they're asking you certain questions that may seem very personal, if you will. Did the child live with you? Can someone else claim the child? All these different types of questions. So you just have to make sure that you indeed are eligible for this, because if you're not and you put that you are, that's tax evasion, right? And that's something you want to stay clear of. So that concludes it all for tonight. It was a pleasure. Again, my name is Rose Brown, also known as the Accountant Therapist, and I look forward to seeing you next week for another Tax Tip Tuesday Live.